Well, a very happy Friday, one and all. Financial markets seem to be just drifting into the weekend this morning. We had a little bit of a wobble after the close on Wednesday, obviously on the back of Oracle's earnings miss. Equities taking a bit of a lurch lower on that, although dip buyers entering the fray and really wrestling control of proceedings throughout yesterday's session, which of course saw the S&P 500 close the day at a record high for the first time since October. But you do very much get the vibe now that we are just going to drift into the weekend. And certainly looking at today's economic calendar, there really is nothing of any interest on it whatsoever, besides the rather disastrous UK GDP data, which we had about 3/4 of an hour ago. Having said that, we are looking ahead to what could be a very, very busy week next week, at least in terms of catalysts. We've obviously got the October and November US labour market report due next Tuesday. We then get the November US CPI data next Thursday, although given that the Fed have already delivered a 25 basis point cut this month, that of course came on Wednesday, I question whether either of those data points are going to tell us particularly much about the policy outlook. Speaking of policy decisions, we also hear from a number of G10 central banks next week. The Bank of England next Thursday pretty much nailed on to deliver another 25 basis point cut, lowering bank rates to 3.75%. The ECB, meanwhile, also on Thursday, they're likely to stand pat. The easing cycle is pretty much done and dusted at this point, with the deposit rate bottoming out at around 2%. And then the Bank of Japan, in the very early hours of next Friday morning, they are likely to deliver a 25 basis point rate hike, with sources stories increasingly rolling the pitch for such a move. There's plenty else going on next week as well. We get labour market data and inflation from here in the UK, and we also get retail sales out of the United States, as well as a couple of notable earnings releases from the likes of FedEx and Nike. Although it must be said that now the final FOMC meeting of the year is out of the way, I am very much getting the vibe that we are well and truly into festive market conditions. I think a lot of participants either already have or very, very soon will be closing up their books for the year. Conditions are likely to thin out rather significantly, so we could see some relatively whippy price action on lighter than usual trading volumes. And of course, that is only going to be exacerbated as we get ever closer to the end of next week and to the proper start of the festive period for financial markets. So a kind of drift into the weekend is the vibe I'm getting today. Plenty of catalysts on the docket next week, but with the vast majority of participants seemingly done and dusted for the year, you do question whether or not that can bring some volatility to proceedings as we move into the Christmas break.